I have so many people asking me all the time how they should be taking their trades. Not from where, but how. And whether you believe or not, there are only two ways that you guys can ever take a trade for your Forex trading. The biggest mistake that I see many traders doing is that they are probably aware of these two approaches, but they fail to understand so many things about it. And the worst is that many times they even mix these two approaches at the same time, which eventually is a leading cause of many traders for losing all their money. So today I'm going to show you guys, but most importantly, explain to you how you should use these two approaches and why you should never ever mix them. Trust me, this will save you so much money. So without further ado, let's do it. Back again, guys, with Joshi Forex. Let's get started because this topic, trust me, it took me so much time for myself to understand how objectively I should have used it. Nobody ever told me about it, literally nobody. And I'm going to tell you why and how you should be using it and why what I'm saying is gonna make sense. And how it's gonna make sense is gonna be based on the facts that we'll be providing to you literally shortly. And then you can take away and you can see if the same logic applies for you and yourself only. Okay, so what are these two types of approach? Now I'm sure many of you guys are aware about it, but you guys not having the in-depth understanding of how you should be using it. But before I go to it, I want you guys to understand that the main problem I see among many traders is that everybody is so focused on understanding their entry model, their entry criteria, their entry POY, their refinement, their imbalance, their VG, whatever. But what they forget to understand is this. So always make sure that whatever strategy you use, whatever, anything, you guys know how to identify your bias. Because if you don't know how to identify your bias, how on earth or why on earth you should be even looking for your POY, refinement zone, entry zone, or whatever zone you want to name it or you want to call it, okay? And the reason I say that because I had many one-to-one with some of you guys, and the first thing that people tend to say to me is like, oh, look, I've seen an order block. There's a massive imbalance around here. So for example, I was literally in a call the other day with a guy. He was somewhere around here in the trend, right? And he was like, oh, look, there's a massive imbalance. You know what I'm going to be doing now? I'm going to be selling. So he was telling me the reason why he went for a sell and then whatever reason he wanted to target all the way down here, right? So then I say to him, do you even know where the market is going? Why are you looking for sell? And he told me, well, look, there's an imbalance, there's an order block, FVG, whatever, ICT says that, you know, blah, 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 whatever. But again, this is so misleading, okay? Guys, please try to learn how to identify the bias. Then once you are good on identifying your bias, understanding where the market is going, now we are going the two approach. So what are these two approach, okay? So before you say, oh, but I knew it. No, you don't know. Trust me, you don't know because I thought as well, I knew it, right? But look at this. The two type of approach that you can ever have in the Forex market or any trading approach that you're using is either pending order or lower time frame. So you can see on the lower time frame, I said shift, candle size, liquidity grab. Don't worry, you're gonna go shortly on that and I'll explain you what they are about. But you guys have to understand that there is just so much to it. There's only pending order and lower time frame, nothing else. Don't come up with anything complex. Now, why you need to know this? Because according to the way you are taking the trade, your pending and your lower time frame, right? Your whole trading plan gonna change forever. So what do I mean by this? First thing first, if I say pending order, right? In this case, we can simply say, just staying into this drawing, right? That if you go with this structure, and I talk a lot about structure. I know people feels like, oh, structure is a BS because you got liquidity, algo, blah, 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 whatever. But trust me, eventually, everybody comes back to structure. Everybody comes back to this. I'm telling you, you can see even your guru, somewhere, they'll be like, oh, it's a bullshit, but then they come back to it. But anyway, just leave it for that. Now, when I say pending, it's simply like this. Let's say you got your order block around here, or you got your demand zone somewhere around here, whatever, and you're taking the trade just by simply saying, price is bullish, and I'm following the trend, just leaving a pending order. Simple as that, easy peasy, all right? Is the easiest thing that you can ever do. Or the second thing that you can do, right, as I was saying, is going to lower time frame. So when price comes inside your demand or your supply zone, okay, then from here you can wait for lower time frame shift. In this case, I'm saying shift because it's the easiest approach that everybody are always using it. And then once you see this, then you can take a trade and go higher. But why? Okay. Now, many will immediately think and argue that if you take this trade over here, right, the same target will be probably 2 times more than the one you left with the pending order. And here is where so many people goes wrong, because they feel like, okay, why do I need to leave a pending order just to make 1, 2, 3? Let's round it up, this one to 1, 2, 3, right? So if you do 1, 2, 3, this come all the way here, okay? So then the same thing, if I do instead with the same target, let's say over here, that gets somewhere nearly a 1 to 6 risk to reward. So obviously 1 to 6, wow, it's beautiful, is a lot of RR. But what people fail to understand is each one of these, they have their own advantage and disadvantages. So what are those advantages and disadvantages? I already started talking about the risk to reward. You see the risk to reward? This one has a 1 to 3. This one has almost the double. So ideally, yes, you can say that this one, the smaller one, it gives you a higher risk to reward. But we all know that in the Forex market or in the trading game or anything in life, higher the reward, higher the risk. So what do I mean higher the reward and higher the risk? So you can clearly see that over here, I'm saying mental pressure, time management, and life circumstances. And ladies and gentlemen, this is exactly those points I'm telling you are some of the most important points that many traders underestimate, and some of them are not even aware of the existence of some of these bullet points that I'm just telling you right now. Okay? Why? Why these points make so much difference? First thing first, when it comes about the mental pressure, leaving a pending order is so easy. You find your zone, you leave a pending order, you go to sleep, set and forget, hasta la vista, whatever you did, that's it, done. You don't need to worry about it. But if you go for this, which has the double amount of risk to reward, you start having certain pressure on yourself. Because firstly, you need to leave an alert over here. Secondly, when price gets over there, now you have to start monitoring. Now the question is, you don't know when exactly the price is coming. Maybe you will be out with your family. Maybe you will be out with your kids. Maybe you will be busy. Maybe you are at school or whatever. Nobody knows. So you will always have that momentum inside of you that, being always an alert, because you're like, okay, price get into my zone. Now what do I do next? You wait for momentum shift. Now I say momentum shift, but you guys can see here, I mentioned about candle size, liquidity grab, because whether you do structure or not structure, right? I know so many people, for example, they're like, oh, look at this. Liquidity has been taken around here. Like let's say this low is the liquidity, get taken. And they're like, oh, I see a dodgy, I'm taking the trade. Or some people will be like, oh, I see an engulfing, I'm taking the trade. Like whatever you do is anyway all lower time frame. But what I'm saying is that even if you, let's say, have this confirmation from your zone, it doesn't mean the price will play out and give you the 1 to 6, because price can easily do this. Right, look at this. Can easily do this and then shoot higher. So if that happens, what do you guys think is going to happen? Is it you're going to hit a stop loss over here? Is that it's going to start chasing the price again and monitoring everything all over again, right? So this brings a lot of mental stress on yourself. You become impatient. You start making silly mistakes. Do you guys see where I'm going with this? So I know at the beginning when I mentioned risk to reward versus, smaller time frame and higher time frame, your mind automatically focused on this. You're like, wow, that's beautiful. I can do 1 to 6. But then now that we're talking about the mental pressure, you can see that actually, no way, hold on. This one makes more sense now, even if the risk to reward is half of this, isn't it? Because in this case, let's say you were in a smaller time frame, you probably would have hit a loss and maybe you couldn't even get any entry. That would have pissed you off so much. But over here, it doesn't matter what happened. As long as bias stays, the direction you're looking for, then you're good to go. Okay, now time management and life circumstances. So there are actually quite more few points, but just to keep it sweet and short for this video today, I'm giving you some of the most important points that you need to be aware about. Time management, again, is about how long you can actually wait in front of the chart every time the price gets into this zone and you're like, okay, I'm waiting for the lower time frame shift. I'm waiting for the change. I'm waiting to hit a stop loss, and then later I'll be taking the trade again. So this is how you can manage your time. You don't know how long that's going to happen because it's unknown. You don't know if you're trading M1. You don't know if you're going to be 4 hour here, 3 hour here, 1 hour here, or even 10 minutes divorcing all these candles. And that brings to your life circumstances. I know so many people that goes to school, college, they work the 9 to 5, and they trade M1. Like, guys, there is no way you can trade M1 having such a busy life. Like, trust me, there is no way. Not that you cannot make it, of course you can do, but what I'm saying is that over the long run, it's not sustainable. It's going to destroy your mentality, your mindset, your way of living, because you're going to be at work and thinking about, oh, lower time frame shift. You're going to be at school, you're going to be, oh, this. You're going to be with kids, you know, whatever, your wife, whatever, and you're going to be like, damn it, I'm not capable of chasing the price. And maybe, trust me, I'm sure this has happened to many of you, exact moment when you are just a second away from the chart, you're going to take a pee, you're going to do whatever you're doing, boom. There we go, you got the best setup that ever happened and you missed that out. Why? Because you couldn't take it. It's always like this, right? So that's why I'm saying life circumstances. So why I'm telling you all of this? Why I'm giving you all these bullet points and why I'm explaining to you about the pending and lower time frame shift? No worry, gonna go shortly in that. Let's finish all these bullet points, then we're gonna go to the chart and we're gonna be doing some examples, okay? By the way, guys, if you're loving it so far, you're enjoying the video, please subscribe, like, comment. It does help a lot to grow the channel. It motivates myself as well to bring, you know, more content like this, because I haven't seen anybody bringing content like this, explaining to you in depth the way I do. I have many people telling me, oh, you do long videos, yeah, and what you want, like, I don't know, in 7 trillion a day market, you want me to make you like 2 minutes video and explain you the holy grail or sauce? I'm sorry, if you're not even capable of watching this type of videos that usually are like 20 minutes, 25, whatever, then I'm sorry, bro, I don't know what you're doing. You shouldn't be even training, you know, because it's all about learning. It's all about being patient. So please, guys, if you love it, like it, leave a like, subscribe, and comment. So let's carry on. Now, here, okay, I think the can you use indicator, I'll leave it for later because this is something that I get asked a lot, many times. But let's continue saying example on chart for, yeah, oh, by the way, this was the lower time from and pending. You can see here that I have entries like the pro and sniper. Now, this is the third type of approach that can be used, but this is very, very advanced that I'll just mention briefly once we go to the chart. But one thing that I want you guys to focus while I'm showing you the example is what type of entry model you should use. All right. So let's go to the chart on GBP/CHF, and I want to show you some examples so you can visually see what is it that we discussed so far. So for example, if we stay here, look, I got perfect example. Check this out. So here you can see if you go with the structure and you follow the order flow, we have a very, very nice clean order flow over here, right? You can clearly see this. Look at this. It's so clean, so smooth. Look at the amount of trades you could have taken just based on this range that we just had so far, right? So let's keep this leg over here. I'm gonna give you multiple examples so you guys can see what is it we're doing or talking about. So what's going on over here? Here, first thing first, you can see that we had a break of structure, right? Price shift momentum with this strong move to the upside. And then again, as I was saying, exactly same as my drawing, if you want it, based on whatever approach you use, order block, demand, supply, blah, 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 whatever, you could have taken this trade, right? Easy peasy. You enter over here, and then what you do is that you target the next high or even beyond, knowing exactly where you want to go. So in this case, this is going to be 1 to 2.5, whatever. Same things again. You see an order block over here, an imbalance, whatever approach you feel that is suitable for you, but you want to work with pending order, you do this, you get all the way high, you're done. Okay, look at the amount of trades you got over here. They are literally headacheless. Like, I don't even know if it exists the word headacheless, but look at this. You literally just leave a pending order right there, okay, and follow exactly the way I did my drawing with the structure. So you got like multiple trades. So those are pending, but as you can see, the risk to reward, not the end of the world. I mean, that's okay. 1 to 2, 1 to 3, 1 to 5, whatever. You have a lot of trades over here, and then so on. That was the buy scenario, and then here you got the sell scenario, right? Look at this. The order flow is so clean. I don't usually trade this pair, but wow, this is amazing. Anyway, so now this was the pending order. So what happens if we jump to smaller time frame? So let's say if I jump to 5 minutes now. So let's see what's going on in lower time frame. Guys, you need to embrace this type of concept I'm teaching you, because if you fully don't acknowledge them, right, you don't understand, it's gonna get hard for you, too hard. And I'm telling you why shortly, because I'm gonna be revealing you something that's gonna give you that aha moment. So here, if you go now to smaller time frame, okay, check this out. Here is where the first thing starts, which is the mental pressure. Now you got the zone, you leave the alert, price gets inside your zone. So just remove this one a little bit over here, right? Look at this. High, low, high, low, high, low, boom. Break of structure. What is it you do? The same exact thing. Find your order block, find your zone. Damn it, you got the demand zone. Place your entry over here, stop loss right below the zone. And now the next thing you know, we going to target at least the next high, and then we can continue all over again. If you follow the same exact target as this one, this was 1 to 2.5 almost. This one is literally 1 to 7.5. You see, that's exactly what I was showing you to before. But here, compared to here, you have a lot of pressure. Here, there's a lot of about time management. Here, you have a lot of pain, okay? But the reward is high. Here, you have a lot of flexibility, right? But the reward is low. Are you guys following what I'm saying? Like, are you understanding this? So the same thing here. Price comes into this zone that we had before for a pending order. Look at this. Price goes inside your zone over here. Okay, this is perfect example. Look at this. Amazing example. Look at this. High, low, bam. Break of structure. Then what do you think happens? You hit a stop loss. Yes, you hit a stop loss. So here, it brings you stress, headache, and whatever you want to say it. If you're at college, if you're at work, if you're wherever you are, you're like, oh, damn it, I hit the stop loss because then I was looking for a buy over here. It did not happen. And then you can see here, there is another break of structure, smaller time frame, right? You see this? This M5 breaks to the upside. So then now you can take the trade. In this case, you take from here, stop loss around there. You target the same as above, the one that you got in a bigger picture. And voila. There you go. 1 to 11, 1 to 3.5. Guys, understanding what I'm saying? Now, of course, I'm not going into refinement, what should you be looking for entry, whatsoever. No, I'm showing you the importance of understanding the set and forget and the headache type of entry, okay? Because you need to have a lot of experience to get this type of high risk to reward. Because with high risk to reward comes high risk and so on. I guess you guys got the point by now. But what I want you guys to understand, which is the most important one, and I want you to know, by the way, entries like the Pro. So the one I was talking about, entry like the Pro, let me give you just a bit of hints on that. This is something that I'm probably gonna make another video about it, is that this type of entries, when I say entry like the Pro, is a combination between these two. So what do you mean a combination? So between this and this. It means that when you have enough experience in the market, you can blend the both of them, and then you can exactly find your pinpoint entry from a bigger picture. Okay, so what do I mean? Is that you don't have to wait for a smaller time frame shift. You don't have to be worried about lower risk to reward. You can have both of them just by understanding what's going on candle by candle. But this is something very advanced and it requires so much time. So in this case, what I mean is that you might be finding the zone, okay? And then inside of the zone, you might know how to refine it. And according to that, you will just simply leave a pending order with a very, very small stop loss, okay? The same thing over here as well. I have actually a very, very good video where I show how to do this, okay? Not in very in-depth because this is something that you have to gain the experience. But again, it was a very good and excellent video that helped so many traders. I got very good feedback on people telling me or how that helped to increase their risk to reward. So check it out, it's on my channel. It's about refining supply and demand zone, okay? Now, this being said, let's go to the point, the main point I want you guys to understand, which is something very, very important, is this. Where is it? There you go. Let me just remove this one second. Let's go back to 1 hour over here, squeeze it on. All right, there we go, we have it. So what type of entry now should you use? Here is the truth that nobody ever will tell you, which is the price of the opportunity cost. Damn it, this one sentence has changed my whole life. You guys want to know how? Not because of trading, but because I did a degree in economics, all right? And one of the hardest thing that I always heard in economics is that the price of opportunity cost. So what is this? It's, in a simple term, is that in order for you to have something in life, you must sacrifice something else, okay? And vice versa. So you cannot all the time have both. There is no way you can have both equally, right? So what do you mean you cannot have? If you were to get both of them, you have to take one higher and one smaller. But in this case, forget about taking both of them. What I mean is that, and as I explained it before, is that this, right? When I showed you guys the difference between higher risk to reward, right? Over here, where is it? Let me go back to the drawing that we had before. Sorry, 1 second. All right, this one, right? So staying to the opportunity cost. When I told you guys about the low risk to reward and high risk to reward, I'm sure some of you got excited thinking, oh, okay, I'm going with the high risk to reward because I think that's convenient. But then, in order for you to get this, you need to sacrifice something else, which is your mental health, which is your life circumstances, which is your family, friends, time management. But then on the other side, right, if you want to have all of this, like mental pressure, mental health, okay, time management, okay, life circumstances, okay, then you need to sacrifice your risk to reward because it's lower, right? And this concept that I'm telling you right now, ladies and gentlemen, is the number one concept that you have to start understanding and implementing in everything. Why I'm saying you this is because when I started and I was trying to do all of this, I was frustrated 24/7 on always wanting both of them. What do I mean by both of them? And here is another breakthrough I'm giving to you, is that you cannot have both of them. And I see many traders, many times they'll be like, oh, I'm taking smaller time from shift. You know, I've seen that. Yeah, smash, boom. And then the next trade, they'll be like, oh, you know what? I'm going with the lots. I'm going out. I'm just going to be leaving a pending order. Guys, don't do that. Do not ever mix the two of them. Never, ever. Now, the question is why? You guys want to know why? It's because trading is mechanical. And trading, whatever you do, it has to always reflect the same type of flow that you're using in the market. So let's say in this case, you have a statistics, a data, right? Data collection. You're collecting data out of 1,000 trade where you do everything around lower time frame shift, okay? So then your data seems like stable, right? It's going like this. You see ups and down on your equity curve whatsoever. And then out of nowhere, one day you're like, well, I'm going out with the lots. You know what? I'm leaving a pending order. The fact that you're factoring in within your data the pending order, that is not even part of your 1,000 data collection, right? That means that if you hit a stop loss or TP, this goes out of what? Your normal order flow, right? So now you have this, and then suddenly you have this, and then it goes back to normal, and then you're like another day, you know, lower time frame shift, okay, fine, and then another out of 200 sample of trades that you're taking, you take, I don't know, 50 of them with pending order, and then in this case, boom, you hit a lot of losses that goes against your data sample. You guys understand what I'm saying? So what I'm telling you is that if you're doing lower time frame, stick to it. Build your structure, build your framework, build your narrative, your mindset, all right? Everything around it. But then, if you're going with a higher time frame, do the same exact thing. But never, ever mix the two. Because every time that you're mixing the two, you're changing the variable. Just imagine, think about it. Imagine now you're leaving a pending order. And this does something like that. Boom, you hit a stop loss. But then imagine you're leaving the trade here, the zone, right? And you're like, okay, I'm waiting for a smaller time frame shift. You don't have any shift over here. You see that? That means that you're not taking the stop loss from there. You guys understand what I'm saying? So there's no way you can have the both. You can either have one or you have the other one. And if you try the both, you're going to mess up so much. And I've seen so many people blowing up their account just like that. And that happened to myself as well. I've learned from those mistakes, and this is what I'm bringing to you. And I hope it's making sense to you. If not, then comment in the section and let me know what you think about it. Okay, I'm more than happy to take your view on this. By the way, guys, you guys probably have seen already the banner about, joining the Telegram group. If you guys want to know, currently the Telegram group is completely for free. I drop a lot of educational content on it, and literally a lot. Trust me, a lot. For free, completely for free. Lately, I've been asked to do a mentorship, but I don't do any mentorship because I feel like what I'm teaching you guys here are more than enough for yourself to learn, to progress, to make money with. However, there is a very small circle of traders that I'm taking into consideration for a very, very, very restricted group, maximum of 35 people. If you guys want to know how that works and you want to take part of it because you've been a lonely wolf, you want to look for, open-minded trader with who you can discuss, learn, grow together. Again, it's not a mentorship. Is a place where you can learn from me directly, okay, and so many other traders. So check out the link in the description or in the comment section, wherever it is. If you are interested, fill out the form. I'm very, very selective. I'm not choosing everyone, but if you put the good work on filling up the form in the right way, I'll be more than happy to take in consideration and send you the link to join on that. It will be paid, but it's literally such a small fee that your mind will be blown away for the quantity and quality of amount that I'll be dropping on there. Okay. This being said, I really hope you guys enjoyed the video. I'll see you to the next one. Make sure in the meantime you check out all these other videos on my channel, because if you don't do that, my man, you're going to miss out so much. I'll see you to the next one. Stay safe, stay secure, and always make sure they use your trading plan and risk management.